I did well over 100K in withdrawals from prop firms,
Wow.
from multiple ones. That's been a great journey for me because I was able to basically make it back more than I lost in the few years. I started my career being a lawyer, and basically the way that I met trading and the way trading entered my life, I met trading by the legal perspective. The biggest trade that I had was a trade that I made 9K in a single trade, so that was a really good trade for me. Trading is pretty hard. Like when you start looking into it, you think it's all easy, but it's not actually quite how this works. In the first year of trading is that I lost a lot of money that I made when I was being a lawyer. I prefer to day trade in prop firms, and I prefer to swing trade using my personal account.
If you had to say to someone, right, here are my top 3 tips to a beginner trader or to a trader in general.
Yeah, so
hello everybody, welcome back to the Atmos YouTube channel. My name is Connor Woods, and today I am joined with Gabriel. We're going to be looking into his strategy, his story, and hopefully we're going to discover some gems to help you along your trading journey. So Gabriel, how are you?
well, it is very nice to be here with you, Connor. I don't know about the gems, but I'm pretty sure that we are going to have a really great conversation here. So I'm pretty excited for it.
Yes, indeed, and thank you very much for joining with me today as well. So maybe just give the audience, just to start off with, just a little introduction about who you are, where you're from, and how long you've been trading for.
Amazing. So I've been trading for about 8 years, and my trading career, let's put it that way, it's a little bit funny because I didn't start it at like a trading since the beginning of my actual career because I started as a lawyer. So I graduated in law school. I started my career being a lawyer. And basically, the way that I met trading and the way trading entered my life was when I was actually being a lawyer for some hedge funds and banks. On that specific occasion, I met trading by the legal perspective. So I started looking into how banks and hedge funds manage and did their investments from the regulatory perspective. And then I started getting interested in how things actually work in a day-to-day basis. So I actually met a lot of friends in the industry, like from these clients that I used to have on my legal career. And then they started showing me basically, so we do this and we do that. And I started thinking, well, this is quite interesting. This looks pretty fun compared to the law career. So that's basically when everything sparkled inside of me. And I said, well, I guess I should start studying and looking into the charts. So that's pretty much the way it all began. And now we are here like 8 years into trading. I'm still technically a lawyer, but I don't practice law anymore as I did in the past. So basically, everything changed from that moment onwards.
Nice, yeah. So 8 years basically from that point where you decided to get into trading from law, from what you was doing. So how has that journey been for you? How has it started in the first couple of years compared to how you are now? Imagine a lot
Well,
different.
yeah, that actually the main point here is that I was doing pretty good as a lawyer. It was more like related to how my day would look like being a lawyer versus being a trader. So we all get to see how you can have like the freedom and being able to do basically what you want, being a trader, because you do your routine, you take care of everything you need to do, and the discipline is going to reflect in the charts and in your results, of course. But mainly you can do like whatever you want. You want to trade the Asia session, you can. You want to trade London session, you want to trade New York. So whatever you want, you can do it. You can make it happen. But from the start, I guess the main thing that I notice is that trading is pretty hard. Like when you start looking into it, you think it's all easy. You just have to follow like this and that and just a few steps and you're there, you're making profit, but it's not actually quite how this works in a practical sense. So the idea for me was to I was doing pretty good, so I didn't have to rush anything. So at the beginning of my career, I just focused like for 1 year studying and getting to know and gathering a lot of experience from these clients that I used to have, and telling them, hey, can you teach me how to do this, how to do an analysis, how to look into the numbers, and
Mm,
so on. So this was the kind of the first step for me. And then everything started moving after the first year. Um, the main thing that I noticed in the first year of trading is that I lost a lot of money that I made when I was being a lawyer. So this was a pretty huge event for me. Um, and after that moment, I had to take a step back and evaluate pretty much everything that I was doing, because although I had access to like great sources of knowledge in trading, you cannot simply get what's inside of their head and how they
mm.
execute things and do it on your side like that simple. Is not that how that works. So I guess this was the starting point. And after that event, I took like 6 months off trading and go back to studying and looking into things that I wasn't doing right, to refine all of the strategy and get to the day that we are today, where I have a much better refined strategy. And things are not easy today, because even though I'm 8 years doing this, um, trading is not simple. It's
No.
very hard, and only those ones that have like real discipline and really want this are going to make it. We know this.
Yeah.
So
So
yeah,
do you
I
know?
guess this answer your question, right?
Yeah, yeah. And I'm intrigued, like when, because everyone does that. Everyone starts off and maybe even makes money at at the very start and thinks, well, this is easy, as you said, and then finds they have that period where the realization period where you're like, this is this is so hard. When it came to you tweaking things, when you said like you tweaked and refined your strategy, was you tweaking and refining your strategy in terms of how you execute trades, or was you tweaking and refining your mental side of trading, your risk management side and your psychology? Because I think there's two, like for me, for example, I kept refining my strategy, and then realized like 3 years down the line it was nothing to do with my strategy, it was to do with this. So I'm intrigued to see if you had the same thing or whether it was strategy based.
Yeah. Yeah, that's exactly the point, because you can, and I always like to say this, you can refine your strategy as much as you want. If you don't have the correct risk management and the correct mindset to do it, it's pretty much cliche what I'm saying, but it is actually what works in the market. So you cannot trade without being on in place in the risk management perspective, and also in the psychology aspect. So the first thing that I noticed is that always when I entered the trade, I was second guessing myself, even though I had like a clear strategy to follow. So this was the first thing that I noticed. So why am I being afraid of the market, even though I have a clear strategy to follow?
Mm,
And this is a funny thing, because you can study and refine your strategy like in the more objective way possible. You're still not going to be able to tell what the market is going to do. The market's going to do whatever the market is going to do, but
best teacher.
you have to position yourself in a place that you know that you followed your strategy, so your rules are there, the elements that you need to take the trade are there, and then you have to be confident and stick with the plan and manage risk properly. So this was the main two things that I totally agree with you, that risk management and the mindset are the two things that you need to have in place. Like there's no conversation without them in trading. Even though this is pretty cliche, it is the real truth. The idea is to have your mind in place, risk management in place, and then everything should fall in place if you are executing according to your strategy.
Definitely, definitely, yeah, 100% agree. And I'm glad that you had the same realization as I did. That you can tweak your strategy all you want. Often it's what's going on up here rather than what's going on actually what you're painting on the chart. So okay then, so fast forward to now, or in the last sort of couple of years or however long you've been profitable for. How's it going in terms of payouts? Have you had any payouts from prop firms?
Yeah, yeah. I had like a pretty great story with prop firm so far. The
Okay.
idea when I started trading is that, well, I was making great money being a lawyer, as I told you, but I had like a big downfall in the beginning. Like I make money for like the first 4 months, and then like everything fell apart. I lost like a lot of money, and I start looking into other options that I had to trade. So I started looking into prop firms. So I've been using prop firms for quite a while, like since like before the boom that we had in the industry in
Okay.
2020. But the idea is, and I guess this is what prop firms really nail, is that you can offer the possibility to someone to show their ability, trade with capital, and make money. Like it's really simple, and you can make a lot of money using prop firms the correct way. You cannot gamble and think that you're going to buy the challenge and make a lot of money from day one if you don't have those two elements: risk management and the mindset. So I did a lot of money with prop firms. I did well over 100K in withdrawals from prop firms,
Wow.
from multiple ones. Yeah. Yeah. So that's been a great journey for me because I was able to basically make it back more than I lost in the few years. Of course, this is a work in progress. So I don't pretend to stop here. I wish to continue using prop firms because they are a great way for me to build my personal capital. And since trading is the basically the only thing that I live for, it's it's everything to me. So I have to build my capital
Mm.
from somewhere. So prop firms are the place that I found to be able to build my personal account. And I wish to continue using prop firms for the long run. The idea mainly for me is to have both options. Like I prefer to day trade in prop firms, and I prefer to swing trade using my personal account.
Okay.
So this is a take that I like to have in my personal journey. But prop firms are like, and I wish I knew about prop firms when I started before I lost all that money, because it would simply have saved me thousands of dollars, literally. So it is that way that I see prop firms. They are very good too for those traders that are looking to build their capital and scale and actually fast forward their career, because it is going to speed things a little bit as well for those that are getting into the markets right now. So
Yeah.
I'm a pretty hardcore user of prop firms.
And I imagine, pretty simple answer, but I imagine that you wouldn't have ever made that money back that you lost from when you started with the lawyer money that you had. You wouldn't have made that back without the capital that you had from the prop firm. You wouldn't have been able to make the
No.
same, right? Unless you like tripled your account or something, which is probably what got you in the mess in the first place, right? So, yeah.
Yeah, yeah. That was
Okay.
actually that was, you nailed it, because I was trying to flip accounts and I thought this was like the correct way to trade smaller accounts, and well, it became basically a routine to blow all of my accounts in my
Yeah.
broker. So it started to get like really ugly in a certain point that I had to take the step back, and then prop firms came in like really great experience. And you were totally right. I wasn't going to be able to build back my capital without prop firms for sure.
Sure, definitely. Yeah, no, I agree with that. Okay. So there's a lot of people probably who may be watching who want to know now what let's start with like the assets that you trade. So what markets do you trade? Do you just trade one or do you trade multiple?
Well, I started trading Forex, but now I'm only trading two assets, Nasdaq and the S&P. So these are the
Ah,
only two that I trade. I really like the way that the US markets move in a day-to-day basis. So I just basically trade the indices. So it's pretty much my strategy works there. My edge is there. I really enjoy how everything roll with them. Even the news, I don't trade news, but even when news hit, I'm almost expecting what the market is going to do after the news. So it's been really great trading these two instruments for the last like 3 to 4 years, I would say.
Yeah, that's cool. And in maybe 5 minutes or so, hopefully we can go on to the charts and have a look at some of those trades that you've had on the Nasdaq and the S&P 500. I'm interested to see that myself. What is Okay, then what is the best trade that you made? What's the most amount that you made from a single trade on one of those markets? If you don't mind me asking.
Yeah, and no, that's perfectly fine. And the biggest trade that I had was a trade that I made 9K in a single trade. So that was a really good trade for me. And it was using prop firms. So my biggest trade was trading with prop firms. That is why I have a really good experience with them. And I was able to manage all of my ups and downs with them. So that's really a thing for me. But I also had my biggest loss in prop firms, which was
Okay.
about 4K. So in my one single trade, the ups and downs, like the 9K profit and the 4K loss, both of them were in prop firms. And this is why it gets really important to tell this, is because if you don't manage risk, you cannot expect that the prop firm is going to manage the risk for yourself. Like, you're going to lose your account if you don't manage risk, and this is a very important thing. So yeah, I guess from here, what I did was basically start implementing a more consistent trading system, so I can have like more consistent profits and not that big of a loss. So all of my losses are now smaller than this. So prop firms really get you into the discipline, and that is what is fun about it.
Yeah, I was going to say, like, without seeing your account size or anything, but the 4K loss that you took, was that probably slightly over staking or over leveraging? Maybe that was more than 1%. Yeah.
Yeah, that
So,
was.
and how did you, like? Because you obviously identified that that was a mistake. I think we all still
Yeah.
make mistakes to this day. How do you, like, if you make a mistake today like that, for example, you maybe just move the stop loss a little bit or whatever you do and you slightly over leverage, how do you overcome that mistake that you make or that struggle that you've had?
Well, basically, I like to take in every 15 days, I like to take at least like half of a day to go what I did on the past 15 days. So the idea here is I'm gonna be so completely honest because I'm really lazy to journal my trades. I journal them, but it is a hard work to do, and sometimes I don't do it on a daily basis, so I do it on a week or bi-weekly basis. So I do this look back of everything that I did, and then I can evaluate those kind of mistakes. And every time I see that I manage my stop like improperly, because I like to move my trades to break even as soon as I see some upside that it's comfortable with me in terms of structure in the market. Every time I see that I did not manage my stop loss properly, this is going to be a big note in my journal, because um, if you move your trade to break even, or if you manage your stop correctly, you are following the number one rule of speculation, which is capital preservation. So
Yeah,
that's the whole idea.
yeah, yeah. Okay, cool. No, that's great. So we're going to dive into, in a minute, we're going to dive into some of the trades that you've placed. I'm just interested to know, not necessarily what your strategy is, because we're going to look at your trades in a second, but how did you come to the strategy which gave you that payout in the prop firm? How did you find your edge in the markets?
Yeah, so that is a really great question, because as I told you, I started gathering like knowledge from all of those sources that I had, like being a lawyer, and those were like really great guys in the market, like managing like even millions of dollars in funds. But I started noticing that even though I was looking into how they trade, I wasn't able to replicate the strategy like as a one for one on my daily basis. So even though I had great sources of knowledge, I needed to build a system for me. So I started doing like a lot of research. And of course, I did buy a lot of courses, mentorships, and everything that I guess every trader goes through this
Yeah.
journey when well, we start trading. And then I started building my system with elements from basically everything that I learned in the beginning of my trading journey. So the main thing that I use for my strategy is looking for liquidity pools and how they interact with price. Because at the end of the day, we are not trading the chart, we are trading the time and the price. That's what the chart is showing us.
Yep.
So that's what I realized. We are not trading the chart, we are trading time and price. So that was the main thing that I took into consideration to build my system.
Okay, brilliant. All right then. So can we take a look at some of the charts? Have a look at some of the trades that you've had, winners, losers, anything in between. Just have a look.
Yeah, yeah, for sure, for sure. We have
Nice.
quite a few here.
Okay, let's do it. Let's do it.
Amazing. So let's go here into the first trade because the idea is to just showcase what I did like from the last, as I told you, I always like to do the look back of the last 15 days. So basically, we are almost doing this together. I had 6 trades in the last 15 days, and 4 of them were winners and 2 of them were losers.
Okay.
So
Is
this
that normal for
first
you?
trade here, yeah,
Is
that's
that
normal.
normal?
Basically,
Yeah.
yeah, yeah, that's pretty normal to me. I'm used to be around 60% win rate, and that is fine to me because I always like to go for a 1 to 2, so always a positive risk to reward ratio. But my goal is always going to 1 to 2 risk to reward ratios because I guess that is the sweet spot for me. And I noticed that my strategy on the Nasdaq and the S&P basically almost I'm not going to say always, but almost uh, gives me that 1 to 2 that I'm looking for. So the way
Okay.
that I trade is I always look for liquidity pools into the 15-minute chart because I'm day trading using prop firms. And the thing is, I started noticing that the 15-minute chart gives me basically all the knowledge that I need to trade during the day. So that's basically what I looked for here in the 15-minute chart. So I'm looking for the liquidity pool, so sell side and buy side. And the main thing that I look is okay, we have external range liquidity here
Yep.
in this move down. And as we can see, we are going to have internal range liquidity around the equilibrium here. So the idea is when I saw the move down here, I already knew that this was going to be a liquidity pool targeted on the next move. Always when I see accumulation, I know that if we are going to target the internal liquidity pool, we are going to manipulate to
Manipulate
the
first.
outside,
Yep.
yeah, and then make the expansion to distribute into the equilibrium, into the internal range liquidity. So basically, here, when we go from this point of taking this liquidity here and doing the first push, the same thing that we saw here, that price goes to the equilibrium, we first see the same thing from this leg to here. So we are
Okay.
going back to equilibrium before doing the last push and taking out all of this liquidity up here, which is a minor liquidity, and then here the bigger pool. So basically what I'm looking, and we can go down into the lower time frames to see the exact structure because you can see that here. And I take my entries always on 5 or 3 minute chart.
Okay.
Although the same strategy can work like in any time frame that you want, so you can trade like even the bigger or the smaller time frames, like even seconds time frames if you want. But the thing is, if you use the 15 minutes to get all of the information that you know, you can take the decisions and look into um, the the other the other elements like your entry point and your stop loss from the lower time frames. So from here, and let me see if I can show you this previous one as well because it is very interesting. This is another trade that I took here on the 21st of May. And the idea was kind of the same because we took out this liquidity here
Mm.
in this leg and then broke above it in the right next move. Every time I see this, it is like, of course, we can treat this as a head and shoulders or like anything else that you might want. But actually, what matters to me is that we had a low, high, lower low, and a smaller higher high here. When I see this, I'm already expecting price to go back at least to 15% to 50% off the last leg and then make a move upwards. And what is interesting about this is that I entered right here and I'm out of the trade here on these relative equal highs because I don't need to take all the way up to make money. I have pretty much everything I want here, almost a 1 to 2 risk to reward
Yeah.
ratio, and I'm pretty happy with it. So the idea is always to look for the things you already know that are going to work. I don't need to have like all of this price expansion to make money, like those crazy risk to reward ratios. I just have to get my piece of the market. And this is what I like to call a low risk move because I don't have to enter, for example, here, targeting the other highs right there, and have like that huge stop loss
Stop
that
loss, you know.
if triggers, like I'm pretty much done with my account. So I'm always looking for uh, small trades, but those effective ones. This is the main thing that I look for. So as I was telling you, the first thing that I look for is where is liquidity. So
The
where is
sweep.
the internal range liquidity? Yeah. Where is the external range liquidity? And where is equilibrium? So the first step is to understand these three things. This is the first and most important step to my strategy because when you understand this, you are going to pretty much see where market is going probably on the next move to
Yeah.
make a sweep of liquidity or to manipulate, and then you can target the opposing liquidity. And by opposing liquidity, I mean the next liquidity pool. You don't need to target, as I was saying, the literally opposing liquidity resting on these highs, for example, because those blue lines that you're seeing on the chart are all liquidity pools that I mapped out as important to my strategy on the 15 minute. So every time you see those blue lines, those are the liquidity pools that I mapped out. So
And
that's pretty much the start of it.
so those blue lines, you map them out before, you draw them as rays on the chart so they stay all the way, and you always
Yeah,
looking for liquidity sweeps on one of those blue lines, whether it's buy side sweep or sell side sweep. You're then looking for the
yeah,
reaction, the pullback, and then you go, basically.
exactly, exactly. And
Okay.
the great thing about this is that, as I told you, I like always to do the look back of 15 days. So whenever I start trading, I'm always going to leave the liquidity pools that I marked out on the charts for the next 15 days. So, for example, I'm going to start this week trading with my liquidities already mapped in there from the last 15 days. I'm always updating them as market moves. But the idea is, even though they are already taken, for example, this one, I leave them there because you can see that price is going to do funny things with it. So here we had an opportunity to enter. Here on the same trade that I took from the order block on the 3-minute chart, it is already interacting with that liquidity, even though it is already traded to and taken. So this is a thing that I started noticing, that when I do this look back of 15 days in terms of highs and lows and liquidities, we can see that even though we already took some of those, we can still see price moving to them and referring back to those prices.
Okay.
So this is going to be something very, very nice to note. And as you can see, we had an opportunity like right here on the 15-minute chart, because as soon as I see this is an opportunity for us to enter, because we can go, for example, and start like drawing all of these structures here. So basically here we could consider this as a breaker, these two. So here, this could be a breaker.
Yep.
And then we have this move down. So when we had this first touch here, after this move up, we had an opportunity to trade to this relative equal highs. Then the breakdown, we had an opportunity to trade to the opposing liquidity right down here. And this is a very interesting one as well, because this makes us go into the next opportunity here that was a loss for me. And this is a good trade to review, because what I was looking into is I saw this inversion fair value gap here, and we testing it. And in my strategy here, we had already taken this liquidity down here, and we were building a new liquidity pool on these
Yep.
lows. But from my perspective, we were already done on the downside, and I was not expecting this further pullback, because I
Another
didn't
one, yeah.
saw any kind of structure in terms of price action for us to actually make this pullback before going up. So I was targeting like pretty much these highs here, because they are relatively equal, and I was pretty much expecting them to be the trigger for the first pullback. And that is because if we see the projection here from basically the fib, they are on the upside on a premium array for me. And here, when I entered, we were exactly at equilibrium. So every strategy has its flaws, and this is very, very important to note, because
Definitely.
this was a loss for me, but it still followed my system. And hey, that's pretty much where I won in this trade. I followed my system. I followed everything that I believe in trading. So that is the way to go, because not every time that you make money, you should be proud of yourself, because if you trade outside of your system, that is going to lead you into a series of problems.
I know this.
So
I know this sounds weird, but sometimes if I take like you just said there, if I take a loss and it's because I followed all my strategies, no one likes to take a loss,
yeah,
but I've sort of got that. It's just going to sound weird, but I've got this like thing now where like when I journal a loss and I've followed my strategy to a T, I actually am happy. I'm like, okay, cool. Took a loss there, but I followed every single rule. I'm happy with that. And it's weird. It's like a weird thing because even though I've just taken a loss, I'm sitting there and I'm actually happy with myself because I followed my rules.
yeah, yeah, and that is something that I feel too, Connor, because when you follow your rules, that by itself it's already winning the markets, because we have so much and so many reasons to take a trade nowadays, because markets I like moving a lot. But taking every trade and every opportunity is not the ideal way to trade. You have to focus on the good opportunities, on those A plus settings that you have according to your strategy, and that is going to be your win. The money is going to come because you followed your rules, because you trade accordingly. So that is something that I think, and I go. It's something that I always like to move forward with, because journaling your losses and journaling your wins. And I actually prefer to journal my losses than my wins because
Yeah.
that is where you're going to find the mistakes and actually be able to evolve into your trading journey and your strategy. So
Yeah,
that's the
I
real
fully agree.
importance. Yeah.
Definitely. Okay, cool. No,
So
amazing. Amazing. Go on then.
yeah, moving forward to the next one here. Actually, we have like two more here, but I don't know if we have enough time to go through both of them because this one is very interesting. Right here, I noticed it that we had these two liquidity points, and as I was saying to you, they matter to me in terms of how price is going to behave while it's moving close or towards them. So mainly the idea of this trade here was that I shouldn't even had to enter this trade because when I was looking at the charts, I saw, okay, we have these two price points here that matter to me, but none of them are still taken on this day for me to be able to look for the setup. But even though I took a trade here that was a break even, because I saw that price started accumulating. And if we see the time here, I always like to trade, and this is a important information as well because it is basically my second step is looking into what time I'm trading. I like to trade the New York session, so I'm
Of
always going
course.
to be taking trades from like mainly from 9 a.m. New York time to 11 a.m.
Yeah.
So this is my main time to trade. I sometimes I trade the PM session, which is this is exactly case. But the idea here was okay. I saw my entry, I saw my system, entered break even because price didn't move as I was expecting to. And then I basically re-entered the same trade with the same analysis, but in the PM session. And why did I do this? Basically, because I saw that all of this that we have here was time distortion, and we were basically accumulating short orders here. So we had a lot of sellers entering the market here to then make the move down, but we were still right into this order block right
Yeah, I can
here.
see that.
And as soon, and let me mark this out here, as soon as we hit this into the PM session and I enter a little bit earlier into the trade, we immediately displaced down and referred back to one of my liquidity levels. So as you can see here, if you just look at it at this price point without knowing the whole context here about this high, this is a price that wouldn't even matter to you and to me if I wasn't marking out those 15-minute highs and lows and liquidity points that I'm referring back on the previous days that I traded. So, and this is mainly the reason why they are here, because I know that in some point in the following 15 days, possibly the market is going to refer back to them for any kind of
Yeah.
move up or
Yeah.
down. So this is exactly what happens here. And the big trade was here.
I was going to say,
So
why
if we
why didn't
look,
you go long? Why didn't you go long at that sweep of the blue line there? Was that not
basically,
the trade?
big, sorry, go on, Connor.
I was going to say, was that not the trade to go long when you got the sweep of that external liquidity there on that blue line?
Yeah, exactly. This, as we can see here, we see a sweep of liquidity here. So these relative equal lows are taken here by this move. And then we have a big move upwards. Why did I not enter this trade? Because basically the time was not the right for me. I never
Ah,
trade after 4 p.m. New York time. So every time I look for a trading to the PM session, I'm always looking to trade until 4 p.m., but not after. Like, I don't like to trade because usually, and this is not a typical move, after 4 p.m., we don't see a lot of volume in the NASDAQ. So, this is really atypical here to have this kind of movements. This usually happens in the AM session. And as we can see, basically the AM session, we were accumulating here And then we could expect this kind of movement, but since it was outside of my trading hours, since we started here roughly on 4 p.m., it's outside of my trading strategy, then I didn't took the trade. But the
Yep.
system is, and you nailed it, is exactly here. We could interpret this as one big accumulation, the manipulation right here,
Mm.
and then the big move right here.
Distribution. Yeah. Accumulation,
Yeah.
manipulation, distribution.
So
That's the
this
one.
is present here. And very clearly, very clearly. But the idea is I have my times inside of each session that I like to trade. I I'm only going to take trades in the PM session from 2 p.m. to 4 p.m. After that, I simply forget about the markets and go on and live my day. So
Mm. No, that's fair enough. No, I completely understand that. Brilliant. Okay.
yeah.
Any others you want to show us? Or we done them all?
Yeah, basically I have just one more here, and this is a really great case as well. Let me just
Nice.
get this off because it follows the exact same pattern. So we can see an accumulation phase, we can see a little manipulation here, and then we can see the distribution.
Yeah.
And this is very funny because you asked me why didn't you take this trade, and I didn't took it. But when I saw this on the next day, because here we are on the 28th and now 29th, when I saw this wick here, I usually feel that they are going to be the next target whenever we have these sudden moves outside of the expected hours that they usually happen. So, because right here, it is not normal to have this kind of volume at this
Yeah.
time. So, when we have these kind of events, we are going to target them in a future market move. It is likely that we are going to target them as a liquidity pool, because as we took these lows, this become a new pool of liquidity, and we have more liquidity resting down here as I was marking out. And it's really funny because this line is like a liquidity from almost the 15 days back that is hit like exactly to the tick here on this move down. But the whole idea here, and as you can see, is the accumulation, manipulation, and distribution. But my trade was really small. I was targeting just the 50% of this gap as my liquidity pool, because I was not expecting that this move down was going to be the one to take out these lows. So that is why I went just for that pretty much 1 to 1.5 here. But the idea is, as I saw this, I know that we were going to make a retracement into the range to target the internal range liquidity. But I don't like to see that small manipulation. So I always like to have like those big takeouts of liquidity and then like a really
Oh, okay.
fast move breaking down the structure. So this is why I was confident enough to take the trade, but not to aim like for more or at least to 50%. That is actually what I always look for. So 50% was going to be down here, but I aimed roughly at the 50% of only this gap.
That
So
imbalance. Yeah.
yeah, the idea is always to look for accumulation, manipulation, and distribution within those contexts of looking at the correct time to trade. So my times are 9 a.m. to 11 a.m., or if I'm trading the PM session, 2 p.m. to 4 p.m. maximum. And the first step, as I told you, is always to look and see where the liquidity is resting. So internal range liquidity and external range liquidity. And the equilibrium is a very important price point for me as well, because after the big move, the probability of price moving back to the equilibrium is very high.
Mm.
So those are the things that I mainly look for, and those were the trades that I took on the last 15 days roughly.
No, amazing. No, I really appreciate you showing us the actual really in-depth way of how you trade. A lot of people don't really show that off. So it looks really good as well. And what I've noticed more than anything is that you're not that greedy. As you said, like you know what it
No.
is that you're aiming for. There's a couple of examples there where you could have had a lot of big profits, and a lot of people would have been sitting there with FOMO, like, oh, I wish I held on. I wish I held on to the trade. But you've got that mindset whereas I know what I want to take out of the trade. I'm happy with that. I'll move on to the next one. So it's quite a good attitude to have,
Yeah.
really.
Yeah, that's exactly it, Colin, because don't get me wrong, I wish I was able to get like the whole move. Like everybody wants to get like all of this,
Of
but
course.
it's like you're going to be exposed to a lot of risk and a lot of stress, mental stress, because imagine sitting through all of this movement. I like to always take trades that are going to move like at least on the next 30 to 1 hour into my target. So I don't
Yeah.
like to sit a lot of time in front of the screen because I guess it is counterproductive. Like it's something that simply doesn't work for me. I like to sit, look for the trade. If it's there, I trade. If it's not there, I simply go on with my life and do other things that I have to do. But yeah, that's totally true because going for those smaller targets allow me to have like the peace of mind that I need to be able to consistently trade and move forward with my strategy. Otherwise, I was simply going to make the mistakes that I did that cost me a lot of money in the past.
Definitely, definitely. No, I fully agree. Okay, cool. Thank you very much again for sharing the strategy. Okay, right. Let's
No
go on to.
worries.
No, I appreciate it. Let's go on to um, some tips that we can give some beginner traders. So,
Yeah.
what do you think from your experience? What do you think it is that most beginners get wrong when it comes to trading?
Well, I guess we were just talking about it. Like we always, and I say we because I was a beginner once, uh, we always want to get like the whole move, the big displacement, the big distribution, but I I feel that that is not the correct approach. And a way that I found to manage this is by having a swing trading account. So I have my swing trading account and I can take the bigger moves there on a swing trade basis. So basically set the trades there and let them roll out. And day trading for me, it's going for those small targets. Like I always like to enter the trades in the AM session and finish them in the AM session, and the same for the PM. But this is the first thing. And the second one is jumping from strategy to strategy is also a really bad thing because and I'm not fancy or anything about my strategy. It works for me, but every strategy could work with the correct approach, risk management, and the mindset. It all comes down to this. At the end, you are just looking at some of the criteria that you have to push the button, but that is not what is going to make or break your trading. Every strategy could work within the correct risk management framework. So the biggest mistake I would say is to ignore or don't look deep into risk management techniques as traders do for strategies and other things. So
Mm,
that's it.
definitely, I fully agree with that. Um, as a quick fire question, I know you've just explained in detail what most beginners get wrong, but if you had to say to someone, right, here are my top three tips, like quick fire, this, and this, what would be your top three tips to a beginner trader or to a trader in general?
Yeah. So the first thing I would say is um, be able to say no to some trades so you can say yes to others. This is the first thing. You have
Nice.
to be able to say no and yes to the market because it's going to do whatever it wants to do and you are the one in control. So that is the first thing. The second thing is have a step by step or an objective plan to follow. So as I was telling you, look for internal range, external range liquidity, look for the time that you want to trade, look for accumulation, manipulation, distribution, or any kind of strategy that you want to trade, but have a step by step. So step one is look this. Step two is look at this. So that is a plan to follow. So having a plan is very important. And the third thing I would say is don't ignore what your mind is telling you. If you enter a trade with fear, you should close it immediately,
Okay.
because if you are entering the trade with fear, you shouldn't have entered that trade in the first place. That tells you that something is off. So you haven't to listen to your signs, internal signs as well, because that is telling you that something on the past, on the first two steps or two tips, is not in place. So that is the third thing that I would say. So these three tips, and it really resonates with me because I went through this journey of managing those three things that I just mentioned, and it really improved my performance in trading.
No, definitely, yeah. And if I had to throw in what I would say very quickly, I would say stop taking it personally. A lot of people take losses and take the markets like they're on a personal vendetta against you, and they're not. That's one thing I would say. The second thing I would say, I would agree with the plan thing, to be honest with you, but I think that coincides with what I would say about journaling trades, because I'm a big journaler. Like learning from your mistakes and all that sort of stuff is absolutely crazy. Um, to be fair, my third one, which probably would be, I don't want to just say like risk management. I would say like have an understanding of the world, of the economy. I'm not saying that you can't be a profitable trader just purely technical, but and you don't necessarily have to use fundamentals, but at least have an understanding of the narratives of what's going on, even if it's on a surface level. So yeah, you might not want to dive into the Powell's speech and every single word he says. I enjoy doing that, so I do it, and I'm an economist at heart. So, but at least know what the decision was and what hawkish and dovish means, and just really surface level stuff. Because I think understanding the narrative in the world is a really really important thing. Like let's take
Yeah,
this year for example. Yeah, if you, I'm convinced that if you just shut away and ignored everything that went on with the tariffs and the trade wars and the wars and etc., I still don't believe. I believe there won't be that many profitable traders that just completely just ignored all of that. But that's just my opinion. um, what's your um, what's your thoughts on the current conditions at the moment in the markets? Are you finding it tough?
yeah. It's really tough, and I would like to add to you, Connor, that what I basically showed here is what I do when I'm sitting on the screen to press the button to buy or sell. Because before this, and I totally agree with you, I'm always informed about what is happening in the world and with all of the main or major economies, because that is going to dictate a lot of the behavior in the market. So it is not that, well, I'm going to say it. I don't believe that technical analysis works without the proper context. Like you need to have the narrative, you need to have the context, because and I tell you this because that is some of the knowledge that I gathered earlier in my career from those guys that I met from hedge funds,
Mm.
banks, and etc., that they use narrative and context today to their day-to-day strategies and how they trade. So that is something really important that I get and bring with me from the beginning, and that I believe that every trader should do, really. But what was the question, sorry, that
Just in
you
terms
asked?
of like, no, just because you said that you're finding, I was intrigued because I'm finding conditions difficult. Past 2 months, I found it
Yeah.
hard, and I just wanted to check that you were finding it hard as well, and it weren't just me.
Yeah, actually, and I guess, well, there's a lot of reasons to why markets are doing what they're doing now, but it is like in the last few days, on the last 15 days, I took six trades. In a normal situation, for example, if we were like last year, I would probably not be trading every day, but I would be trading at least like 2 days more, I guess,
Okay.
because I always take one day of the week to not trade because there's always going to be, whether it's Monday, Friday, or whatever. So it's going to be that day where the market is not going anywhere. So I already know that at least one day of the week I'm not trading at all. But I I truly believe that we are experiencing one of the hardest times to trade because the market conditions are really in that spot where we have opportunities, and that is something that it resonates with my strategy because I go for short-term liquidities. So I prefer to go for short-term trading these times than swing trading, for example. So my
Mm.
swing trading account is like netted at the moment, so I'm not in any positions. But the idea here, and I guess this is already an advice for the traders trading prop firms or whatever, is look for short targets that you can almost kind of predict that the market is going there. But at the end of the day, the market is going to do whatever it wants to do, as we were speaking during the podcast here. So yeah,
Yeah,
that's roughly
definitely.
it.
Okay, amazing. And I fully agree with that. And I'm a bit more of a swing or position trader, to be honest. I don't day trade like you do. I hold trades for a couple of days to a couple of weeks, and it's been tough. I can tell you it's tough out there. But we'll get there.
Yeah,
It's all good. And risk managed though, it's the main thing. And I'm journaling all the way.
yeah.
Okay. Just lastly, then last couple of questions. What's your thoughts on the current prop space, the industry as a whole right now? I mean, I've seen it from a professional point of view. Prop firms not being backed by brokers, regulation issues, shut down, loads of new firms starting up. What's your thoughts on the current space?
Well, I was trading with other prop firms before, and I unfortunately was trading with one prop firm that shut down. And I was reading into this a few weeks back that in 2024, almost like 100 prop firms like shut down during the year, which is like it's crazy. It's crazy to
Mm,
think about this because we don't see like 100 brokers shutting down like in a year or even or maybe that just doesn't become a headline in the news. But what I'm trying to say is that you really have to go to the reliable ones. And what I mean is if you're looking to trade with a prop firm, look for those that are here like for the long run, that have an institutional approach to it, because you want to trade professionally. You're not going to trade the with someone else's capital if it is not from a reliable source and also from a reliable institution. So that is why I really like broker backed and prop firms, because it is something that really goes with me as well because I like to have both accounts, the prop and the broker.
yep.
So if you have the possibility to manage everything into one ecosystem, it's mainly the best thing that you can do. And I really advise traders to look for this kind of opportunity. Uh, I feel that we have a lot of to do and to evolve in the prop space because we always have margin to do things better. But currently, I guess, and I feel this that we are much better than we were when I started trading with prop firms.
Yeah.
So we are evolving in the space, and we are basically cleaning the space as well. And I feel like in 1 or 2 years, we're just going to have those ones that are really consolidated and also providing good services for the traders.
Yeah, amazing. No, I fully agree with that. Um, one last, okay, so we're at the end now. So I'm going to thank everyone for watching, etc. But I'm intrigued to know, um, you'll be part of the audience for the next interview. So, is there a question that you could think of that I can give to the person who's next?
Mm, well, one thing that I always like to ask people when I know that they're trading for a while is how did you manage to start saying no for the markets? So and this is a point for me that it was really a breaking point in my career where I had to start learning how to say no to the markets. And for me, the main point was because I lost a lot of money.
Yes.
But for each trader, it's something different. So when did you started saying no to trades and why did you do it? I guess this was is my go-to question.
No, I like it. Okay, I've written that down for the next person who comes to the interview. So, okay, brilliant. Gabriel, I just want to say thank you very much for joining me today. I do really appreciate you breaking down your strategy, completely open and honest about your payouts and your journey from being in law into trading and 8 years down the line. And it seems like you've got it cracked, and that can be sometimes the most dangerous thing, but also a reflection for you that you've done what most people can't do, and that's an amazing thing. So thank you very much, and thank you to those who have tuned in today. If you have enjoyed watching this, then make sure you follow us on our social medias for all the clips and the updates and the next interview. We're going to be rolling out more of these across all of our channels, so make sure you hit that like and subscribe button and drop a comment about what you maybe want to see next. Okay, thank you very much, Gabriel, and I appreciate your time, and I'm sure we'll catch up soon.